I think the best way to think about this past weekend was the second weekend in two where banks required rescuing, right? So we had Silicon Valley Bank and the whole process there, and the surprise around Signature Bank was slightly less expected on that previous weekend, and now we've had this weekend with Credit Suisse. And what's happening is that it feels like we're in a very fragile moment for the system. And so when you're kind of dealing with this fragility, there are shocks to confidence, and somehow that seems to attack the banks that have the lowest amount of confidence in them. And Credit Suisse has been an outlier in the European banking system for years, as we've chronicled in the Financial Times. The Greensill scandal, the Archegos scandal, all kinds of mismanagement, restructurings, but most importantly, it got lost in the news on Monday. But when Silicon Valley Bank was being rescued here in the UK by HSBC and the FDIC in the US. Credit Suisse actually filed its annual reports on Monday, and it reported material weakness in its accounts, which was a huge bout of confidence, which was to say basically after all this restructuring, they still could not produce numbers that they had full confidence in and had to tell in their annual report there was material weaknesses. That was then followed by the comments by the Saudi bank investor who said he wouldn't prop up the bank any longer. And all of a sudden you had a kind of perfect storm of confidence taking place into the weekend. And so what happens now is if there are other institutions where there's lack of confidence and there's another sort of shock to the system or some sort of unexpected surprise, that is sort of where we're monitoring. You layer that in with the AT1 issue that we're watching very closely, and you have a few elements this week that will be very closely watched.
All right, if we have time, we're going to get to that AT1 issue. We don't want to get too in the weeds with the viewers, but I do want to get your reaction to a few things. First off, Swiss authorities. They seem to go to great lengths on how they're characterizing this deal. I want you to listen to this. We want to get your reaction.
This is no bailout. This is a commercial solution because we have a takeover of UBS. UBS is taking over Credit Suisse. So this is a commercial solution and not a bailout. We really wanted to avoid a bailout for different reasons.
So, Arash, you heard right there, Swiss officials really emphasizing this is not a bailout. They're calling it a commercial solution. What's your response to that?
I think we should be really clear in the fact that it appears to be the case that there was a consensus that Credit Suisse would not be functioning this week had there not been a solution. So they can call it a commercial solution. Some people will call it a bailout. You notice the huge amounts of loss guarantees, the liquidity line provided by the National Bank. So it has some feelings of what would be referred to as a bailout. But it is fair to say that UBS is purchasing all the stock in Credit Suisse. However, there are huge guarantees to prop up that. And this shotgun marriage was arranged by the government and by regulators in Switzerland. It was by no means a deal UBS wanted to do. And Credit Suisse had to accept it, holding its breath, knowing it was for the greater good.
Yeah, shotgun marriage is the term a lot of people are using for this deal right now. Very quickly, I want to get into these AT1 bonds. Generally, right now, we're hearing these AT1 bondholders will basically be wiped out, which is normally the opposite way it works. Normally, bondholders get paid first. Give us, if you can, a very quick explainer of the importance of this AT1 bond situation.
Well, this was a class of shares, class of debt that was created unique to bank stocks and unique to banks. And it was supposed to rank, as Jeff explained, superior to equity in the capital structure. But they also have different triggers around when a bank needs to be recapitalized and have different kind of functions to traditional debt. So some people are saying, well, is it really a surprise that when a bank basically had to be rescued that these things get wiped out? And other people are saying, wait a second, that now we have no confidence in the read across on these AT1s across the board, and why you're seeing a huge selling of those debts this morning. So this is going to be a critical issue. I think it's an issue that will require some further explanation by Swiss authorities why they structured the deal like this. We pushed last night to get further answers. We didn't get given how quickly things came together, we didn't get a fully aligned response. I think there's a lot of moving parts, and I think it'll be incredibly important for the Eurozone, for the Swiss regulator, to explain today why they did it this way and how the debt will rank going forward.